Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. The quarterly earnings reports have reignited a bit of a stock market rally for a couple of weeks at least. Market's taking a little bit of a breather as of this recording, but let's find out from our team here what they think about where the market may be headed, if it's still headed to the upside, and why. Editor-at-Large Steve Reitmeister, Senior Market Analyst Charles Rotblut, and Top Market Technician Kevin Matris, joining us once again for the conversation. So Charles, we're going to start with you because right before we started recording this, you put out a blog post on Zacks.com. You've got a real interesting way of describing this market here, I thought, and I don't know if you stayed awake nights trying to think of this or what, but we're in a hot potato market, he says. So tell us what you mean by that.
It is. It's a fast money market where we're really seeing traders dominate the direction of the market, and it's really a small group of them, relatively speaking, relative to the broad universe of investors moving stocks back and forth. And we can see this in volume. We're averaging about 120 million shares per day in QQQ, the tracking ETF for the NASDAQ. In April, we were averaging 140 million. And even if you look at the 12-day winning streak we just had in the NASDAQ, despite 12 days of gains, we still didn't get anywhere near April levels. In fact, if we look at May levels, which were lower than April levels, we're not even there. So we are seeing stocks move upwards, but we're not seeing volume follow. And there can be an argument made when you look at the VIX, which has also dropped, that it's not so much that people are less fearful, but people just have less interest in puts, and more people are just moving to the sidelines. And when you looked at what happened with the spring, where you had a lot of fund managers and a lot of money managers really miss out on the rally because it was really driven by some of the riskier stocks, now they're in a situation where they're looking at these big runs and they're afraid to get back in. And I do think there's a lot of people just waiting on the sidelines, waiting for a clear sign that things are turning around, waiting for a pullback in stocks. Neither is happening, and stocks can move in one direction or another in a low volume scenario like this, but I think it's important for people to realize that we're not seeing volume and we're not seeing conviction following this move. Instead, we're seeing light volume, which suggests traders are dominating this market, are playing hot potato with stocks.
All right, when the music stops, we go over to Kevin. You buy that argument?
No. I think the market is moving up for three reasons. The first one is earnings. Earnings, by and large, have come in better than expectations. They haven't been spectacular. There's been some high-profile misses like Microsoft, for example, but by and large, they have come in pretty decently. And a lot of companies have been able to, provide some better-looking forward guidance. And I think this has given the market a bit of confidence, or at the very least, a bit of relief. The other thing, though, is the economy. Even though unemployment has been ratcheting higher, jobless claims have come in better than expected for 3 weeks in a row. And if you look at a lot of the economic reports as well, you can see that the rate of decline has slowed, and what typically will follow a slowing rate of decline is finally some market improvement. But at the risk of sounding overly simplistic, I think the market is rallying because it's really just not going down.
That's profound.
Well, think about it. It's not going down, so that's why it's going up. But the market tried to break. Listen, the market.
I'm trying to get my head around
check this out. No. Here's the explanation. The market is going down the market is going up because it tried to break down last month, and it just could not do it. Okay. The market found very good support at the 8,200 area. So the market is a price discovery mechanism. Prices are either accepted or rejected every day. And that 8,200 area, those lower prices were flatly rejected. Now the market is probing the upside to see how high of a price can we go until those prices are rejected. So there is price acceptance. We're going to see how high we go until those prices are no longer accepted. It is my belief that we're going to continue to go higher, and I think that there is going to be maybe another 10% to the upside until people are able to really make a good justification for, hey, should we go higher or should we pull back? But again, since we are talking about price discovery, lower prices were rejected, higher prices are being accepted, and more people continue to go into the market with the belief that even higher prices are in the offing.
All right. He said a lot there.
I think I understood his points.
The one point that he did make is that earnings are looking better. And there are always those people out there, and there's always the naysayers out there. These naysayers today are saying earnings are looking better only because of cost cutting, not solid revenue growth.
But at this stage of the economic cycle and the earnings cycle, that's okay. That's where they're going to come from first.
Okay.
And corporate America has done a very good job of fine-tuning their balance sheet. Unfortunately, partly at the cost of employment of individuals, but also in other areas. What I'll say is the market is looking better. The market is going up because it didn't go down. I'll agree with Kevin.
Balances that off.
Hard. I find it very hard to argue against that point. But yeah, two main things. One is that earnings are better than expected and confirming that probably the bottom to the economic cycle is in. And then secondly, great article in the Wall Street Journal on Friday by Alan Blinder, who's an economist at Princeton, and saying it's almost like a reflexive mechanism in the economy that at a certain point, if you pull back so hard on spending, that at a certain point you have to start replacing things, okay? And it doesn't take much for the economy to rebound. So he's not talking about this gangbuster, gung-ho recovery. He's just saying if you pull back so hard in spending and everyone just doesn't replace clothes and appliances and a few other things,
right, at
some point you have to start doing that. And that's what the second half is going to look like, where people just like, I got holes in my pants. I got to go out and buy more. I got to get new shoes. I got to replace that blender. And bit by bit, that's where the improvement in the economy comes from that a lot of people are expecting. So with the market being a forward-looking mechanism, taking a look that we have probably made bottom at the way things normally recover in the economy, that there's sense for it to rise. How high can it rise? That's a difficult thing to say right now until we really do see the actual growth, not the expectation of growth.
All right, we're going to give Kevin another chance to redeem himself here. Over the past,
I don't need a redemption.
No, he agreed with you. That's right. Over the past 2 weeks, Dow and S&P 500 have both gained more than 11%.
Right.
That's a pretty decent 2-week up move.
Right.
For both of those indicators. So what you're saying, am I understanding you correctly, is that the clear direction is up yet for the market?
Right now, I think the direction is up. Again, this whole idea that it is forward-looking and that the market is a price discovery mechanism is true, and you will see extremes on both ends of the spectrum. We saw the extremes on the downside, in March, and now we are potentially getting ready to see some of the extremes on the upside. I think the rest of the earnings season is going to shape what the future expectations are for the market and how high we can probe the upside. But if they come in similar to what we have seen so far, I believe that we are going to be looking at some higher prices. Now, it doesn't mean that the market's going to go straight up. I see good support at around the 8,900 area for the Dow and then 8,600 for the Dow. So I think there could be a minor pullback just to test the market support and just to test the market's resolve. But as I had said earlier, if we can hold those areas, I really do believe that we're going to be able to go up to the 10,000 area for the Dow, and I think that we have a real chance at being able to get to 1050 for the S&P. But as Steve had said too about the forward-looking mechanism, people are piling into the market because of the anticipation that things are going to get better. Things are not getting worse. They seem to be getting better, and if you believe the market is going to get better, you don't wait to buy once they are better in the future. You buy now for expecting things to get better in the future, and that's why we're going up.
Yeah, Charles, market getting better?
Well, I think the market and the economy are getting better, but I think it's important to put things in perspective. Yes, earnings.
I knew you would do that for us.
Well, the thing is, everyone's saying, well, earnings are better, and in fact, 76% of S&P 500 companies have topped expectations.
Right.
That doesn't mean that business is good. It means that analysts were overly pessimistic. And it's worth noting, if we look at about approximately the 150 S&P 500 companies that reported last week, 59 companies have seen their full-year forecasts cut in the last 7 days. So yeah, they might be beating, but analysts are still skeptical. And I think there is skepticism. And if you look at the economic growth over the next 6 quarters and what we actually did in the first half of the year, we'll see the advanced number in the second quarter later this week. But you're really looking at a 2-year span where the economy really hasn't grown at all. It hasn't contracted over the 2-year span, but really when you look out towards the end of 2010, maybe we're slightly bigger, but we're also looking at a different mix where you're looking at government playing a much bigger role in GDP because of all the spending. And I think when you look at all that, it seems, and it combined with the volume we have been seeing, sooner or later the market's going to have to get in some type of trading range and probably hold in that trading range. We don't know what the upper or lower level to that limit is, but I think we're heading in that direction. And as a result, you'll see price swings. And I think for investors, it's important to realize that you can make money in it, but you have to be selective. But I think it is going to be a recovery where people don't feel the recovery, and it's going to be a market where people hear about other people making money, but they're not quite sure how they're going to do it.
All right, what's next?
I see a couple possibilities here. Again, I've already said that I believe the economy will start getting better, but I believe it's going to be a very long, modest slope up in the economy. So one possibility is the trading range that Charles has kind of painted, where perhaps the trading range is kind of slowly, modestly going higher over time. However, this market, and I do happen to agree with Charles' earlier point, I think that the traders are having a lot of fun. And I think they're just like pushing things around, and investors not understanding the meaning of it besides them just having fun pushing stocks around, okay? So I think the greater possibility is that we have big run-ups, we get ahead of ourselves, and we pull back down. Okay, so in other words, that people do see improvements in the economy, they run it up high, okay, overshooting what the economy can really provide, and then we got to take back 10, 15%. So right now, I don't believe that 9,000, 9,100 has overshot by that much. If we make it to 9,500, 10,000, I would not be surprised to see that stiff pullback to the 9,000, 8,800 level. Before the next earnings season, and then here again, that's when corporate America has to come clean. Do they deserve our money in their stocks or not? And so I think we're just going to go through this cycle.
All right, we're going to leave it right there because we're not going to go forward. Just borrow one of Kevin's lines of logic that worked for him. Why not me? With everybody here, I'm Terry Ruffalo.